Start off the show then by putting the spotlight on Inc.5, which is a footwear brand. They've secured close to $10 million in a Series A funding round. We've got Amin Virji, who is the managing director of Inc.5, now joining us on the show. Amin, thank you so much for taking time out. Let's start off by understanding what the game plan is. $10 million that you've raised, where is it that you plan to allocate these funds?
So allocation is basically going to be into expansion of retail stores. We are basically into physical retail. We are present in roughly around 28 cities today. And we see a lot of growth potential across a lot of tier 1, tier 2, tier 3 cities. So majorly the funds are going to be used for expansion. The other place where we look at utilizing the fund is growing up back-end capacities and also expanding certain categories which complement the footwear.
So what about the geographical expansion in terms of which cities is it that you're really going to be focusing on? What is going to be the breakup of the stores as per your different geographies?
So we have 76 stores today. We have a reasonable good presence across the metro cities and tier 1 cities. Having said that, yes, there is room to grow in the tier 1 cities as well. But we are very, very bullish in the tier 2 and a little bit in the tier 3 cities as well. The entire concept of merchandising and buying is changing. People are looking for brands, and there are very, very few national players in the footwear category across. So we see a lot of potential in the tier 1, tier 2, and the tier 3 cities.
So on average then, I mean, how long does it take for a store to actually break even? What does this have in terms of an impact on your profitability?
So opening stores is a very capital intensive thing. A lot of capital is utilized in opening stores. You need to carry a lot of stock as well. So depending on the location, depending on the overheads, which includes your rental and your staff cost, it may, being a high street store, may take probably 8 months to 15 months to mature to a certain level, which will then start generating operating profits for us. So yeah, it could be anywhere between 8 months to 15 months.
Okay. And what is the outlook in terms of how many stores the company is looking to now open by FY25? What's the target?
So that will take the count to almost 200 stores for us.
You know, at a time when everyone is really moving digital, online is really where all the action is. Why is there so much focus on offline and, you know, opening of new stores?
So digital space is growing at a very rapid pace. More and more youth are now buying online. And I think that also adds value in terms of us opening physical stores. People look at our stores in their cities where they live. It gives them a confidence in terms of the brand. They've seen the product. There is physically the store is there in their city, and that gives them a lot of confidence to go ahead and buy our stocks online as well. So in fact, we look at this as a very positive thing for us, where our offline presence is very, very strong, and now with the online coming in, both stitched together gives a lot of confidence to us and to the consumers.
So what has been the growth rate and the kind of target revenue that you have for the company, I mean, over the next few years?
So we've been a bootstrap company. So we've reached this 220 crore rupees with our fund and obviously support from our bankers. Now with having great investors on board with us, the kind of growth that we look at, we may probably be crossing 400 crores in the next 2 years. That is what we are targeting. And yes, the expertise that our investors would get will also add a lot of value and will help us in growing the company.
And is your profitability on track in light of the store openings?
So given a small base, when you expand very rapidly, especially in retail where it is a capital intensive structure, your EBITDA will be in a little bit stress initially, but we don't see that as a big challenge because again, we are all looking at a long-term growth strategy. including our investors, and we feel that we are on track on growing the company and getting the desired EBITDA.
Sure. Sure. And, finally, premiumization, that as a trend has definitely picked up. Sector by sector you go, we're understanding that the premiumization trend is only growing. Will that be a strategy that you will consciously adopt, looking at the premium side?
Yes, so we've seen a lot of intake in terms of the premium products that are there, not in the low end category. But yes, so we specialize in the ladies category. So we are seeing a lot of sales happening in the 2,500 to 3,000 rupee category. So again, that basically goes out to say that the consumers are there. They want quality product, they want good product, they want something which they like, and they are willing to shell out money on those products.
Okay, Amin, good to have you on board. Thanks so much for joining in.